Hi everyone! If you're a business owner in Malaysia, you've probably heard about e-invoice, a new requirement by LHDN. But what does it mean for you? Don't worry, I'm here to break it down in simple terms. Let's get started. First, let's understand the main purpose of e-invoice. Essentially, e-invoice is a way for companies to prove their income to LHDN and validate their business expenses. Every invoice issued must first be sent to LHDN for verification before it can be shared with customers. And every expenses incurred by the company must be supported by a validated e-invoice. This ensures transparency and reduces tax discrepancies. This applies to all types of transactions, whether it's B2B, B2C, or B2G. Now that we understand the purpose of e-invoice, let's take a closer look at how the validation process works. When a business generates an invoice for a sale or service, instead of sending it directly to the customer, it must first be submitted to LHDN. This can be done in two ways. Through LHDN free e-invoice portal, known as e-Invoice. This is mainly for businesses that don't have an integrated accounting system. Via API integration for businesses using accounting or ERP software. This software can be from any accounting software brand in the market, as long as the software are e-invoice compliant software. Once the e-invoice is submitted, LHDN system will automatically check the invoice for accuracy, ensuring that required fields like seller details, buyer details, tax amounts, and descriptions are correctly filled. Compliance, making sure the transaction follows e-invoice guideline. Duplicate checking, verifying that the invoice hasn't been submitted before to prevent errors or fraud. If the invoice passes validation, it receives a unique identification number, UIN, in the form of QR code from LHDN. This confirms that the invoice is now legally valid and can be sent to the customer. However, if there are errors such as missing details, incorrect tax calculations, or duplicate entries, LHDN will reject the invoice, and the business must correct and resubmit it. Once LHDN validates and approves the e-invoice, the business can then send it to the customer. Customers can also verify the invoice through LHDN system, ensuring transparency for both parties. This validation process ensures that all business transactions are properly recorded, reducing tax fraud and making tax filing easier for businesses. It also means that companies can only claim tax deductions on expenses that have a validated e-invoice, which is why obtaining e-invoices from suppliers is crucial. Now, what happens if you need to make changes after an invoice has been validated? LHDN only allows amendments, rectifications, or cancellations within 72 hours after validation. This means, if you spot an error, you must correct it within 3 days. After 72 hours, no further changes are allowed, and the invoice is considered final. This strict time frame means businesses must be extra careful when issuing e-invoices to avoid unnecessary corrections. Once the 72-hour window closes, any corrections will need to be handled through credit notes or debit notes, which can complicate accounting and tax reporting. That's why businesses should implement a strong review process before submitting invoices to LHDN, ensuring accuracy from the start. LHDN categorizes e-invoices into 5 main types, depending on the nature of the transaction. These include the standard e-invoice. This is the most commonly used. It is issued when a business sells goods or provides services to a customer. Next, we have the credit note e-invoice. This is used when an issued invoice needs to be partially or fully reversed due to returned goods, overbilling or pricing errors, discounts or rebates given after the invoice was issued. On the flip side, a debit note e-invoice is used when extra charges need to be added after the original invoice has been issued. This is common when additional services are provided. There was an underbilling error. Lastly, we have the refund note e-invoice. This is issued when a company needs to return money to a customer due to canceled transactions, overpayments, and failed services. When it comes to proving your business expenses, obtaining a validated e-invoice from your supplier is a must. But what if the supplier doesn't issue an e-invoice? In that case, you may need to generate a self-billed invoice on their behalf to properly document your expenses for LHDN. However, self-billed invoices are only allowed under specific circumstances. Now, let us discuss what are the 7 specific circumstances that allow to issue self-billed e-invoice as a proof of expense. First, payments to agents, dealers, and distributors. Second, importing goods from foreign traders or using services from overseas suppliers. Third, profit distributions, including dividend payments, excluding single-tier dividend. Followed by electronic commerce transactions such as Lazada, Shop. payouts to betting and gaming winners, transactions with individuals who are not running a business, and interest payments, excluding those charged by licensed banks. For example, if you're renting a property from an individual landlord who doesn't own a business, you may need to generate a self-billed invoice on their behalf to support the payment made. It is crucial to follow LHDN's guidelines when issuing self-billed invoices, as improper use could result in penalties or tax complications. If you find this useful, please like the video, subscribe to my channel, and stay tuned for more simple tax tips. Thank you for watching. CLPC Advisors, your trusted tax consultant.